presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to Eddie in Boca Raton. Hey, Eddie, what's going on?
Hey, Tom. How are you, man?
I'm doing great, man. Yourself?
Good, good. It is a treasure to have TFNN every hour during the trading day, to be there to help you, to guide you, and even to give you some peace of mind, or like that somebody else is there with you while you're trading this crazy market, either up or down.
Well, listen, we appreciate you growling and prowling with us out here, because we wouldn't be out here, folks, if we didn't have all you guys, gals, tigers and tigresses as clients. And, you know, the market teaches you every single day, man.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 7 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great week, folks. You are what you believe you are. Humans are powerful magicians. You have the power to make yourself what you are right now. But it's not your reasoning mind that controls your power. It's what you believe. Market-wise, let's take a look at it out here. We have the Dow Industrials up 70, NASDAQ up 30, S&P's up 10. Gold contract up $5.50, traded at $2,651 an ounce. We have silver down 48 cents, $31.02 an ounce. Light sweet crude down 66 cents, $70.34 a barrel. Notes and bonds. A 10-year note down 3 ticks, 114.23. The 30-year down 6 at 125.01. And King Dollar. King Dollar right now is trading up 143 ticks at 100.866. The euro's at 111. The yen is at 143, and the British pound is at 133 to 1 US dollar. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. And I want to thank Jacob first off for doing the show all last week. Bridget and I were down at Cape Cod. It was awesome, particularly coming out of Florida, going into 75-degree weather, which made a huge difference. But we are back and growling and prowling right now. The SPY, we take a look at the SPY. So what do you have with the SPY? The bottom line is that this is still pushing highs with volume expanding. Now, the way that we moved last week is telling me that we're going to have to build some cause here. You know, what is building cause? Building cause, folks, is going sideways, frustrating people, back and forth, back and forth. That's where I expect we are, because it looks to me like we're going to make another leg higher inside the marketplace. We go to the Qs. Now, here's the divergence, and it's big divergence, man. Now, what has happened in the past is that the SPY versus the Qs, or the Q versus the SPY, can be different highs within 3 months, easy. We've seen it plenty of times. Let's see where we're going to go with the Qs first. So the Qs, bottom line, they went into the last swing point and they expanded volume. So what that is saying is that they are going to go to the high now. So it's possible that the Qs go to the high, the SPY goes higher, then maybe, you know, we'll see how this shakes out. But my take is that in both cases, this is going to be building cause for higher price. Now, let's go to the bond market. Okay, because this is pretty wild, this bond market. So first, I'm going to put up the bonds that we're trading. Now, the bond market itself, okay, is ahead of the Fed, folks. Okay, that's how this is shaking up. Now, when you take a look at it, we already spiked the high that was out there from 2 months ago. And the same type of setup, I expect. It's going to be hard to trade these right now. That's the reason being is that there's not enough conviction, and I suspect we're probably going to make our way down to the lower end. Right now, the 10's at 114. We're probably going to make our way down to this 113 area. If we go to the TLT and take a look at it, TLT is the 20-year plus, okay? You take a look at the TLT, same type of setup. Now, the TLT This is a good trading vehicle. I suspect you can see the spike that we had. It had good volume, but it wasn't enough volume. Then what ended up happening last Wednesday is that you came down on volume. So that's just telling me that the TLT want to get somewhere into, I still need this closer to me. We're at 98.78. Yeah, 1 second. Let me put this on another screen. You'll see that there. I just got to go to another screen here. TLT. Okay. So we can get to the 96.47. That's the swing area of the 30th of August pretty quickly. You know, what you had out here today, yeah, you did reject lower price, but I think this is the halfway move down. So the Fed fund rate, okay, bottom line, right now we bring this up, it's going to be, I think it's, well, there it is, 4.75 to 5. Well, 4.75 to 5, yeah. That's the rate now. And the bottom line is that the next meeting is in November 7th, and then December. And, you know, there's plenty of Fed governors out there that are saying, hey, we think there should be another, you know, half a point in November. So we'll see how that baby shakes out. But, you know, bottom line, to me, they're not as easy to trade right now as they had been. And if you're trading them, I'd let it go down to that level, because if we do test that lower level and you have a contraction of volume, it'd be awesome. That'd be the buy. We go into the gold contract, and gold's in a large ABC structure up. And that structure is 28.05. Now, that's only a 1-to-1 also. We're already at 26.52. Now, the differential here is big, folks, okay? Now, it's not that the gold stocks have given back anything, but they're having a hard time getting to higher price. Little by little, they're getting there, okay? You know, like you had, I mean, see, I wish the GDX didn't take out this high today. We went to 40.54, and you're at 40.44, but yet you got over the high from the Fed last week. That's not cool, because they continue. Well, look at this for a second here. You really got to look at this, because it's like, okay, what is the disconnect here? We put the GDX. You're at an all-time high, but yet an all-time high in the GDX is 46, and we're at 40. Well, 45.69. There's something wrong with that picture, man. You know, and it's not that we don't own gold stocks. I do. But I think you got to be really careful, man, in the context of what you're buying, because that is not operating as it should. Now, the dollar. It's all about the dollar. This dollar breaks, I suspect, because I think the market's going to break topsides. And I'm talking, when I talk about building cars, I'm talking about like 4 or 5 weeks. Nothing short, man. And then when you take a look at the dollar, that dollar breaks, you know, the lows. The broad market's going to go, commodity market's going to go. Stay right there, folks. Come back when I'm at Mr. Steve Rhodes.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstad's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow is trading up 49, Nasdaq's up 27, S&Ps are up 11. Let's get over to our man, Mr. Steve Rhodes, as we do each and every Monday at 20 past the hour. And don't forget, folks, Steve has an outstanding show every day right here at TFNN. Also has a great newsletter, Mastering Probability. Now, it's very easy to get Mastering Probability. Come over to our website at TFNN. Go into newsletters. You're going to see Mastering Probability right on the right-hand side. You get it for 1 month for $149. 6 months for $695, which is a savings of $199 at 22%, and 1 full year at $1195, which is a savings of $593.33%. Now, when you get it, folks, okay, you're getting all the tools that Steve has developed, and they're huge. And, you know, if you go back even a couple weeks in the archive, you're going to see all the signals that he gives you each and every day. Okay, the amount of information that is in Steve's letter is absolutely phenomenal. Get over there and try it. Steve Rhodes, what's going on?
Hey, I'm waiting for fall to kick in already. It's 90 degrees here.
Listen, man, it's been pretty intense. Same way. When I left Steve last Saturday, the heat index was 105. It's like, oh man, we're getting smoked down here, folks. It's like, and it's all about that humidity, you know. It just doesn't come.
No doubt.
Yeah. But anyway, the Cape was awesome.
That's great. That's great. Hey, you know, and when I turned in just to log in and everything, I heard you talking about the SPYs and the Qs and so forth. You know, if we take a look at the SPY and the Dow Diamonds on a daily basis, it's got a confirmed A to B equals CD pattern to the upside.
There we go.
It took the SPY took out that August 30th swing point, which had 62 million shares, and we passed it with 75 million shares on September 19th. So that's your discussion about, hey, you're building cause makes a lot of sense, moving sideways because of the movement that we had last week. And so this is suggesting we get up to 593, and I think, I think, like you, if the Qs can get going and get above that swing point, the one from the 22nd, I believe, was August 22nd.
Yes.
You know, which got 37 million shares. If we can get above that, which is also a TD9 count top, you talked about the different tools in the newsletter. If we can take that out, and certainly if we do it with volume, you know, then we get back to its highs or beyond that or what have you. We also have a confirmed A to B equals CD to the upside inside the Dow Diamonds.
I love it. I know. I just brought this up, Stephen. Thank you, man. Okay. When you're bringing it up, because it's intense, man. And, you know, what's really cool, there's enough bearishness out there. I don't blame them. I mean, but it is what it is. You know what I mean? It's like, hey, man, this is going higher. And
yeah, even the IWM, Tom, a confirmed A to B equals CD pattern to the upside. So I think the markets are just waiting for the cues. We know, you've taught us, the cues can certainly drag everything up and drag everything down. So when are they going to get on board with the A to B equals CD pattern? That's the question.
Exactly. Pretty cool.
So I thought I would also do, we talked about the newsletter, and I wanted to share with folks what's inside it. And so it's inside the daily newsletter. I first started off with the current market position inside Mastering Probability, and this is really the same set of instruments that were being looked at by the Timer Digest folks.
Yes.
So it was the S&P via the ES, and I look at the ES Mini Gold and 30-year Treasury. So I've got that listed here, as well as the offsetting the SPY, the GLD, and the TLT. Very popular instruments. Most of our listeners trade those at one point or another. And at least this provides you with what the current daily and weekly outlook positions are and where support or resistance is. So that's going to help folks, as prices even moving, whether it's moving higher or moving lower. And then what follows next is what I do is give folks kind of a feel for anything that I'm looking at on an intraday basis worth noting. So, for example, this is from this morning's newsletter, and what I had identified, I said we really need to pay attention to 30-minute charts, especially for the Russell 2000, which was confirming a TD9 count top, as well as the ES Mini. And both those suggest that price should pull back and pull back towards support, which is exactly what the ES Mini did. So if there's anything that I see on an intraday basis, kind of a play-by-play, I put that in there, and then I provide folks with the data for the most popular stocks in most people's portfolios. So I take a look at different futures, whether it's equity futures or metal futures or oil and gas futures, all the sectors inside the S&P 500, the top 10 NDX stocks, the top 10 Dow stocks, and a few others that subscribers have asked. And what this provides us with is it shows us exactly what the market condition is for the daily time frame and where the daily support and resistance levels are. And then what I do is I provide, so there's really about 3 or 4 pages. That's all people have to really look at, and they get the entire gist of what's going on inside the market. So I'm covering exactly what's taking place in the ES Mini, the Spot VIX, the NQ, the Dow Equity Future Contract, the Russell, the US dollar index with gold, silver, copper, oil, natural gas, T-bonds and T-notes, and then the New York Stock Exchange Advanced Client Oscillator. So I've given the primary summary of exactly what's going on inside those instruments, and that's all that people really need to look at. Those that want to get a better feel for the market, I think, want to take a look at what's transpired in the international markets, or 5 top international markets, the Shanghai, Hang Seng, Nikkei, FTSE in the UK, and the DAX in Germany. So, for example, there's a nice trade set up here for the Shanghai. It formed a TD9 count bottom. It should go target that solid green line. That's a TD9 count breakdown level.
Yes.
The Hang Seng is in an A to B equals CD pattern to the upside. The Nikkei is in an A to B equals CD pattern to the upside. The FTSE's got some trouble out there. So the FTSE closed inside its swing point. Looks like maybe it was September 7th, 8th. I can't pull that up right now. So it looks like that might want to go target that low. In the case of the DAX actually formed a Rhodes Momentum Indicator top, but it found support at that little green line, that green oscillator and change line.
Okay.
So its overall signal is really neutral, but it gives folks the opportunity to take a look at what's going on in an international basis. I then take a look at the U.S. dollar index and the 5 currency pairs that make up that weight, and we can see this little sideways move that you've been talking about out here. It does have a bottom pattern, but just a sideways move. After that, then I go into all the detail of all those instruments that really have been covered above, but this provides folks with my multi-panel time frame.
And what's amazing, Steve, is that, and folks, you got to check it out, man. I mean, just please check it out, because you just heard Steve as he's explained it. The amount of information that he has in these 3 pages is extraordinary. I'm telling you, it's extraordinary. And if you get it, and just look at it, okay? I don't care if you're brand new in the business, you will learn these correlations, man. I mean,
the motto of TFNN, it's educating investors.
Oh, no doubt, man.
Right.
And you do an amazing job, because
So we're here to teach people and to help them to be able to do this on their own, out there. And so what's cool about providing all the intraday charts here is that it gives you a feel for understanding what's happening. Markets aren't just going to move in one direction.
Right.
There's going to be, especially in intraday. And what's cool about the intraday charts is you can really get a feel for what's going on. And then they do an end of day report, so it covers all of these sectors inside the S&P 500, the index ETFs, the indices, and so forth. So I just wanted to give that as a quick, just to give people a feel for an overview. You weren't here last week, but we were doing, Jacob and I, we were taking a look at gold. And my suggestion there, you and I have talked about this. I believe we're in the next major bull market run. Just wanted to update people real quickly here. Gold's going to form bar number 8 of a TD9 count top this year as we exit 2024. If we take a look at the last TD9 count top on a yearly basis, it was the bar following bar number 9. This is suggestive that we may see gold rally for at least the next 2 years.
That's a beautiful thing, man. I like that.
Totally. And I think we will. I shared with folks this morning how the gold was trading in all the major currencies, and then how gold's trading in all of the Middle East currencies. And it's to be expected, but it's good to be visual to see what's really going on. So any pullback we might get could be rather limited.
And folks, it's so easy to get to Steve's newsletter. You're already at TFNN. Go into newsletters, matching probabilities, right and right. Get it. Steve, thanks so much, man. Have a great one, safe one. Look forward to the show tomorrow morning.
You bet. Take care.
Stay right there, folks. Come right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The consistency you're looking for is closer than you think. 1 or 2 adjustments are usually all you need to change your equity curve from red to green and keep it there. Come join Larry Pesavento live to learn what separates the winners from the losers. Join Larry Pesavento on the 2nd and 4th Friday of every month for 3 hours of live trading from 9 a.m. to 12 p.m. Eastern Time, where Larry will show you the market setting up and, most important of all, the state of mind of a winning trader. By watching Larry trade, you'll learn the Fibonacci levels, you'll learn how to apply A to B to C to D trading patterns, you'll learn trade management, pattern recognition, and much more. Join Larry August 9th and 23rd for more live trading action. For this month only, use code LarryAug24 at checkout to save $50 off your first month as a subscriber to Live Trading Fridays for his live trading sessions, where you'll sit right beside him as he trades the market live. For this month only, enter code LarryAug24 and save $50 off your first month. For all the information and to reserve your spot today, visit the front page of TFNN.com.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. Dow's at 47, Nasdaq's up 26, S&Ps are up 11.5. We got to go to Boeing, man. It's pretty intense. So you get the folks on strike at Boeing. Boeing just turned around. I guess they wanted a 40% pay raise. Boeing had gone back to them with a 25% pay raise. Now they just came back with a 30% pay raise. Now, the thing that is wild. Now, they're talking about a 30% pay raise plus a 401 match to 100% plus 8% bonus raise. I mean, this is about as intense as you can get, folks, as to how you're getting huge amounts in the labor market. Now, if we take a look at their stock, don't buy it. They have more problems than we really realize. Because what you have here is that they've still been consolidating for a long period of time. So we'll see whether it gets down. It's at 156. It's like, okay, you're going to go to the 140. We'll see. But I thought, just in the context of paying that type of pay raise, well, that's pretty intense. Now, what I have seen, and I talked about on the air before, is this. Is that in the 70s, I saw it in the 70s, man, even when the inflation numbers were going down and they stopped bringing the rates down, the inflation numbers were still larger than anyone wanted. That's the real bottom line. And we know that, a 2% year over year seems to be far-fetched. It just does. Things are more expensive right now, period. When you have just one union getting 30+% pay raise, that's unbelievable. I mean, that's over the top as far as you can go. So we'll see where this shakes out. What has happened, though, inside of the note and bond market, and this would be for here, let's go look. First we'll pull up Toll Brothers. So Toll Brothers is at all-time highs. I believe this is all-time highs. It's going to change the real estate business in a second, and it's not going to make it less expensive. Yeah. That's at all-time highs. Lennar, we take a look at Lennar. Lennar came down hard on Friday, but that's still, I believe, right next to all-time highs. Yeah, and yes, this is another ABC up, actually. Yeah, this is an ABC up. This is huge. So you got 183. It's a 140. It's a 43 A to B, which is going to get you like that's 200. Like 215. That's a monster number, man. And you're going to see that happen. I know I've been talking about a couple of the houses I moved, but you talk about fast. Oh, my God. One went within 2 days at 1.150. The second one just went at 1.2 in 1 day, 24 hours. Yeah, you're hearing that correctly. And the second one was going to get financed, but with a big down payment down. So what tends to happen, and it happens very quickly, is that folks are going to understand that they can deal with the financing aspect of it a little bit later. Just get in. And I think they're right. What is going to be interesting is to still see what happens with the $500,000 to $600,000 deal. I think that's going to happen too. Particularly if we get this down to So if they let's look at this for a second, because if they get this down, so right now, okay, yeah, so 2 more half rate cuts would get us to 3.75, 4.75. So then you'd have mortgages, at 5.5, man. Mortgages at 5.5, everything's going to be off the shelves, folks. They'll be right off the shelves, man. Because then they'll be hoping that it could actually go down further. Now, I don't see it going down further. I just don't. But that doesn't mean it won't, particularly if things slow down. But it doesn't look to me like things are going to slow down that much if Boeing is coming in there with a 30% plus payment schedule, because the companies themselves have been making bread. And what that takes is that it will take squeezing some of the companies for less profit, and so more of the middle class would stop making more money. And we'll see how that shakes out. Let's take a look at some of the higher volume equities out here today. What's up in the top? You got NVIDIA. That's still dealing at 116. Tesla's at 249. You have... Let me do this. 1 second. Yeah, you get... let's see. Amazon's 193. So if we go inside the NDX first and take a look what's moving the NDX. So inside the NDX, you get Tesla up 4.7, Intel up 3. Oh, we got to go over Intel. That's disgusting. Micron's up 2.8. Taken away from it, Regeneron's down 5. Marvell is off 2 to almost 3. You get CSX off 2. Now let's go to Intel. This is like, what a mind blower this is, right? Intel, one of the companies that was in the leading edge forever, and they're getting bids. Well, here, let's look at this for a second. You get Apollo willing to put $5 billion into it. They got a $96 billion market cap, which is nothing. Okay, we take a look at their revenues. Man, look at that. 5 years ago, folks, they took in $78 billion. This year, 52. Look at that. Damn. 62, 72. That's $25 billion, man. And every one of these stats are going down. There's no growth whatsoever. In China, they're losing 3.5% a year. The United States, they're losing 1.5% a year. Other foreign countries, they're losing about 1.3. Singapore's a big number. That's about as intense as you get. Just think about that for a second. Now, it's important to think about that is when you are investing in general, always have your mind on a number that you will not let that go below. Because who would ever think that Intel would be at lows when the market's at highs? Stay right there, folks. Come right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Hey, welcome back, folks. We have the Dow. Dow's up 51, Nasdaq's up 27, S&Ps are up 12. Let's go bring Vista up. I'm in tomorrow, folks, if you'd like to hear the CEO of Vista Gold. Fred's going to be on. Okay, Fred Ernest. He's going to be on at 3:15 tomorrow. Now, this is starting to have a decent run. Okay, the bottom line, it came off that 35 cents. We're trading about the 60, 70 cents right now. My take is that this is on its way. Next stop is about $1.10. When you do the ABC, it's an ABC. When you do the ABC, $1.10. Well, 75 first, 75, and then $1.10. Then you get the real jump up to this 220 area. So we'll see how this shakes out. The bottom line is that, the gold market in general, I can't wait to ask him about the contents and what it means for gold companies when gold is actually running at 26.51. That's a monster number, folks, okay? And the expense ratio, well, that's what I really want to find out about him. Has the expense ratio gone up as much as the physical price of gold? Because their expense ratio, the biggest expense ratio inside of the gold mining, folks, is cement and oil. That's how it comes down. But I'm sure you're going to break that down for us, which is going to be pretty cool. There's no doubt about that. That'll make a big difference. That's going to be on Tuesday. And then on Wednesday, I'm going to have the Vice President of Direxion on. And what'll be cool there is start feeding us back the aspect of traders coming in and out of these different sectors and what sectors basically people are putting money into versus taking money out of. Because the amount of money that's been going back and forth is pretty incredible. Now, let's go back. I want to go back to gold for one more second. And the reason being is this. What has happened is this, is that for some reason, the ETF structure, now, it went up this year, meaning the amount of money that has gone into it, but very slowly, nothing heavy. So the ETF structure inside of the gold market has not accelerated like it did when we stopped moving in 2009 going up to 2011. Or if I want to bring it all the way back to 2002. But the last one, the acceleration was pretty dramatic. Now, the cool thing here is this, which we don't know. We don't know is that if people just not paying attention, and then all of a sudden everyone's going to stop paying attention, and it starts going, well, we don't know. Sorry about that, folks. We just don't know. That's the real bottom line. That's pretty good. I got a call from Russia. Scam. Anyway, so that context is really important because what has happened is this. From the run from 2009 up until the run in 2011, every time that, you would basically get in an ETF for the equities, what happened ASAP is, of course, the sponsor of the ETF had to buy all the equities. Okay, so, it's a very small market, and when you have that happening, it goes right across the whole sector. And when you take a look at the gold and the silver equities, they're not acting the same, man. They're just not acting the same. You have a few of them that are really consistent. They get good volume coming up to their highs. And then you get others that, there's just not a demand yet. And even, listen, the others that even don't have a demand are still up 100 and 200%. But the differential, if you've traded golds, they can go up 1,000% in a couple of years, like pretty quick, because you're dealing with low numbers for the equities in general. And in this particular case, we're dealing with a huge number in the price of gold. Now, what we are not dealing with is that we're not dealing with a huge number in the price of silver. Silver is still lagging. It's like, okay, what's that all about? You take a look at it, and silver's like they're running out at, $30.99. That's not even the high from 6 months ago. 6 months ago, 5 months ago, we're at $33.50. Now, an equity that is operating really cool, silver equity, is Hecla. If you start hunting stuff, keep your eye on Hecla. Hecla, right now is at 663. Next time they come out with numbers is, let's see, November 6th. Their numbers go like this. They're going to be looking to do 231 million and bring 3 cents to the bottom line. And you can see when we talk about growth, these are big growths, man. Canada, they're growing by 12% a year. 12% a year. China, they're growing by 5% a year. Japan, they're growing by 3% a year. So it's the smaller markets that they're not doing well in. So the good news is that you do have some of the silver stocks that are moving. This whole thing is, it's a little confusing in the context of, okay, particularly, that's why I want to hear from Fred tomorrow. I want to hear, what does it take to get gold out of the ground, number one? What does it take to bring the earth back? Because what will end up happening is that he'll give us the numbers that it takes to get the gold out of the ground, number one, that it takes the mine to go back to a hill, number two, and what is the spread? That's what we want to know. We want to know, what is the spread? Because the bigger the spread is, of course, the more it's going to make. Now, in Fred's case, they plan on getting, hundreds of thousands of ounces of gold. This is not a small mine. In Australia, it's a very large mine. And what has happened is that you're dealing with the Australian dollar, and the Australian dollar is positive for what he wants to do. It's trading at 68 cents on the dollar to the U.S. dollar. That's about as good as you can get, because what ends up happening, of course, is that you have a huge amount of employees. You're going to be paying your employees in the Australian dollar. You still get paid in U.S. dollars. Now, the whole deal about getting paid in U.S. dollars, folks, is a monster deal. There's no doubt about it. That's how you have to break this thing down. So we'll see where this whole thing shakes out. But I think the biggest part of this is going to be the aspect of that dollar itself breaking the lows. Because if we break those lows, what you are going to see, you're going to see something that's very fast and very furious. Let me just bring it up again because you can see how this lays out. The reason, I think we really have to go sideways for, 4, 5, 6 weeks. The reason I'm saying that, let me show you how this shakes out. I'm going to put it back 15 years, okay? And see, the area that I mark right now is going to be important because we traded there at these highs from, we're trying to break from 2015 going all the way over to 2022. So you're talking 7 years. You don't break something quick, folks, when you've traveled like 7 years. It just doesn't happen. And we've only been here now for basically 2 months. We're going on our second month. I do think we're going to break it, though, because what's going to happen is that the rates are going to continually, to go down. The more the rates go down, fundamentally, the more the dollar will go down. They'll all go down. The dollar will still be the best of, the euro and all this stuff. But the bottom line, everything will be at lower prices. Stay right there, folks. Come right back.
The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. The Dow's up 62, Nasdaq's up 23, S&Ps are up 13. Let's go to the SPY first and take a look at the SPY. So we take a look at the SPY. You're up $1.29, and what you're going to see here, yeah, just like Steve said, man, I took a B point out, took it out with volume. It's going a lot higher, man. Not a little higher, a lot higher. So we're going sideways. That's what you can expect, to build more cause for higher price. The diamonds, let's go to the diamonds and take a look at it, because that's about as intense as you can get, man. And these are going to be higher numbers, man. You might not be able to buy more with them. But the bottom line, yeah, same thing. You get another ABC up. I'll have all these numbers. What you want to look at, they crossing the B points, folks, last Thursday. And then the Qs are different. But guess what? I've seen that before too. And if you take a look at the Qs, you get the same deal. You do have an ABC up. So the Qs are saying, let me see this 1 second. I'll get this quick. I'll get this. Because this is cool, particularly because it doesn't look as good as it actually is. So, what is that right there? That's 478, 48. Oh, awesome, 30. So 30 is saying 508. So this is saying, what's the high up there? Oh, look at that, 503. So the Qs are saying 508. 503 is the high. The SPY, now let's do the diamonds. The diamonds are saying, okay, so I got this one, 421. Yeah, it's a 21. 31. 40. No, 39. 439. The diamonds are saying 439. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership, and fly with it. Come back and visit Tommy tomorrow morning. Kicks us off, 9 a.m. Great show. Have a great one, folks. Have a safe one.